Thank you for the people that are continuing to join our webinar. This is the 2024-25 budget briefing hosted by KPMG. All right, so good afternoon to all the ladies and gentlemen in the house that made it to our 2024-25 Tanzania budget presentation. With you today, my name is Jennifer Kajuna, a senior manager KPMG East Africa, and I sit in the Tanzania Office Audit Department. I will be your moderator for today. We have in the house a good number of seasoned experts, subject matter experts, who will digest and let us know their views in terms of the budget that was recently read by our minister. So we can maybe look at our schedule for today, and I would request the slide to now move. All right, so we will start our session with getting opening remarks from our tax partner, Samuel Esupu. And then after the opening remarks, we will get to hear from Dr. Donald Mari, who will take us through the economic analysis and overview. A lot has been set forth in the budget. A lot of reforms and initiatives in place have been put in place. So Dr. Donald Murray will be able to share with us his insights in terms of what he sees from an economic outlook perspective. We'll then have Sabato Mwaliki, who is a senior manager sitting in the tax department of KPMG in Tanzania, will take us through the proposed tax changes and the key highlights that have been presented yesterday. We'll also have Irene Nanziri take us through the regional tax changes. So these will be the key highlights from an East Africa perspective. We'll then get to engage with our panelists, where we will have a panel discussion and get to hear their views and what's their take, and whether the reforms that have been put forth in the budget really resonate with the theme that we have for the current year. We'll also get to have time for our Q&A session, and then we will hear closing remark from our country partner, Alexander Njombe. So this is a brief program for today. And I would now like to welcome Samuel Esupu, who is a tax partner with over 15 years of experience in the subject. Over to you, Samuel.
Thank you, Jennifer, and good afternoon, everybody. We are delighted to have you today, this afternoon, as we dissect the minister's budget speech that was tabled yesterday. We do know we were having expectations, different expectations from different business communities in terms of what changes might be affecting their business, and some of the changes that might be in favor of the businesses. What we saw yesterday is that the minister tabled the budget of the government, which was a total of about 49.3 trillion shillings, with several revenue, expenditure, and tax measures. As we look at the budget speech that was tabled yesterday, we noted a number of changes, some of which the business community were expecting to happen, and at the same time did happen, and some of them did not happen. Just to give a flavor in terms of some of the changes that we note, and our panel of experts will discuss them at some point, and at the same time be presented by our speakers. We did note from our business support changes that are favorable to the business community, including VAT refunds now, where we are seeing now the ministers proposing to have this paid within 30 days. And what we do notice is that this is a very good move, so that at least now the funds that we normally have sitting in our VAT refunds for a number of years will now be able to be paid back to us as the business community, as taxpayers, within 30 days. In reality, how that is going to work is something that we look forward to see. We do expect probably we'll be getting changes in the VAT Act, and what in any event, what we are saying, if they don't pay in 30 days, what does that mean? Do we mean that we're going to be charging the tax authority interest? That is something interesting to be looking out for in the finance bill that will be coming out. At the same time, as a business community, we've been faced with challenges around dollar shortages, and we have seen that the minister is proposing to have BOT as the statutory gold dealer, and at the same time, zeroing VAT on gold supply to the Bank of Tanzania. That is something with the aim of incentivizing the gold and reducing the dollar shortage. That is something to look out for as a business community. Again, what we've also noted from a financial institution perspective, specifically on banks and microfinance and business that deal with lending money and money issues, we have noted that now the minister is proposing to have a review and prescribe procedures specific to write-offs. Something interesting coming through. I think this has been a challenge and has been a pain to most of the financial institution, and I think this is something that we definitely will be looking forward to. In other aspects, as you look at the budget speech, you will also note that the minister was also proposing to widen the tax base, and some of the key things that came out from that speech was in terms of taxation of digital content creators, taxation of agricultural produce, some of the changes that were issued actually back in the past, including this one, but again, it has been reintroduced. We're also seeing that given that there's quite a number of digital assets trading, the minister is also proposing to be charging that to tax. Again, a lot of gaming activities have been happening in the country, and I see now the minister is proposing to sort of introduce excise duty, something to see whether it's going to encourage or discourage, but all these moves are aiming at widening the base and at the same time increasing the tax revenue collection. But again, quite a number of proposals and sector changes that have been proposed from mining, from agriculture, and from financial services. And definitely most of these are aiming at is giving power to the local industry, and at the same time creating employment and ensuring that the economy goes forward. Without further ado, I would like to take it back to Jennifer, given that I've only have 3 minutes to be able to take it to the next speaker for their presentation. Thank you, Jennifer.
Thank you very much, Samuel, for the opening remarks and a bit of insight into the budget and what we will be speaking about today. So our theme is sustainable economic transformation through fiscal consolidation and investment in climate change mitigation and adaptation for improved livelihoods. So to take us through the economic outlook, we have in the house Dr. Donald Murray, who is the Executive Director at REPOA. He's a very well-known economist. He's a principal researcher, and he has a vast experience in policy analysis, socioeconomic research, and institutional development. He's also actively involved in the development of policies in Tanzania. So I'm just trying to paint a picture of the experience that he has and the credibility that he has to speak to us today from his perspective, what he thinks about the budget. So welcome, Dr. Donald Murray, the floor is yours. And as Dr. Murray takes the floor, a bit of ground rules. We'll have a Q&A session later, but if you have a question which relates to a presentation that is made, you can either drop your question or comment in the chat. And then when we have the Q&A session, you can always raise your hand, unmute, and then ask the question. Over to you, Dr. Donald Murray.
Thank you, Jennifer. I think I will start with providing the introduction and context. I believe participants can see the PowerPoint. Is someone running the PowerPoint? Yes.
Yes.
So what you can see is that this is one year left to but last year last but 1 year to the conclusion of the third 5-year development plan, which the country is implementing, which really dwells on issues of competitiveness and industrialization for human development. What we have seen is the increased growth of GDP of around 5.1% in real terms, which is higher than the previous year, but definitely below the target. And we have seen what shocks that has occurred around the globe, and Tanzania has shown some resilience to these uncertainties, which has included the Ukraine conflict, climate variability, and the real global inflation. But the growth that we are told increased from 4.7 to 5.1 was led by relatively few sectors. Arts, entertainment, very untraditional. Mining, which is, of course, gold and coal, and you know why the surge in the value of these commodities increased suddenly because of these geopolitical challenges. Finance and insurance, food and accommodation, and ICT. What we will also note, of course, is the slow growth in those sectors that are labor absorbing, meaning agriculture, construction, and manufacturing, which contributes relatively much larger share to the GDP. What this demonstrates really is the importance and the need for accelerating structural transformation in order to enable faster growth and modernization of those sectors that are labor absorbing and of course contribute. And we are talking also of a large labor force that is engaged in agriculture, but the low productivity that is inherent in this sector has also slowed down the rate of transformation. And what this entails is, of course, lower poverty elasticity of growth, which is about minus 0.3, meaning that if there's any 1 percentage point increase in GDP, will only reduce poverty by 0.3 percentage point, which is quite low compared to experiences of other countries. And this is because, of course, growth is focused in few sectors. Growth is driven by public sector investments. Export are still based on low value primary commodities. And we have seen some urban bias degrowth and, of course, high vulnerability, where a lot of people are clustered in and around the poverty line. And what we have seen, the Human Development Index, while it has improved from 0.529 in 2021 to 0.352 in 2022, but it's really below our peers if we compare Kenya, Uganda, Zambia. And what do I see the challenge is the years of schooling. Tanzania has the lowest years of schooling on average. 5.6 vis-a-vis Kenya 7.7, Uganda 6.6, and Zambia 7.3. This is an area that we need to pay attention. We have seen inflation and monetary developments. Of course, inflation is declining, consistent with the global inflation decline. We have seen, of course, stability, a little bit of stability in fuel prices, and food prices, which had pushed the prices up. And also modest growth in supply of money, the broad money supply, and credit to the private sector, slightly increased from prior year by slightly more than 1 percentage point, which is encouraging. In terms of external trade, I believe the slides are moving. I don't see them moving myself on the screen. Okay. The external trade performance, of course, growth in exports, but which has helped to shield us from the deficit. And again, our savior had been gold and the select of traditional export crops. We have seen, of course, significant diversification of exports since 2000, where close to 60% of exports were coming from traditional exports to a decline of 12%. Now, mining have taken over to close to 50% and manufacturing about 17%. So what is the expected outlook? The projected growth for next year, of course, is projected to increase to 5.4%. We expected to be able to maintain low inflation, which is within the target agreed in the East African community. We have seen the target of improving revenue collection, and some of these measures were already announced by the Minister of Finance. The current tax GDP ratio, which is the actual previous year was around 11.8. It has stayed quite around there for a long time, but it's targeted to raise to 12.9%. If I'm to show the budget trend, there is a slide which shows the budget trend in recent years. I'm not sure if you can go to that link, which you clearly see. What you will see is, of course, there have been an increase, consistent increase in revenue, but also expenditure. But over the last 5 years, revenue have increased faster than expenditure, so the deficit is closing. But we can't say that we are spending means saturation or satisfaction with the level of services, public services. I think it's about an attempt to reduce the deficit, but I think there are a lot more expenditure needs that we would expect to see in the future. I would like also to compare tax performance, because we are talking about an attempt to raise tax to GDP ratio to 12.9%. But there is a slide there which showed an average of tax to GDP ratios in Sub-Saharan Africa. Average is 16.3%. So we are quite below Sub-Saharan average. And you can see other countries that have a higher above average. Some of these countries include Mozambique and countries which we have the economy that is of similar characteristics. This is something we need to explore and to try to see how we can reach this ambition. And in terms of there's another slide that we try to show the potential vis-a-vis the tax efforts for different taxes. For excise tax, the current tax effort is 46% of GDP. Import duties, about 35%. The income tax has the lowest tax effort, 12%, which we've been collecting much less than the potential of contributing 30% of GDP. Here is where I think efforts need to be raised. We are doing quite better with the VAT and so forth. So this as far as what are the expectation in terms of the revenue performance. But I see emphasis to increase productivity, particularly for agriculture, for all crops, livestock, and fisheries. I see a lot of emphasis on domestic value addition to natural resources beneficiation, which is quite important for promoting diversification. But of course, continuing the focus and investment on closing the infrastructure gap. And in terms of further investment in human development, these are critical sectors of health, education, and so forth. The government also projects opportunities in critical minerals, blue economy, green and digital economy as well. I've seen appetite for interventions to address climate change in terms of adaptation and mitigation. And of course, emphasis on what is ongoing. Some of you have participated in preparation for the forthcoming National Development Vision 2050. But there is a big challenge of inclusivity because GDP is growing at a faster rate than the reduction of poverty and even the creation of jobs. So inclusion is quite important. And the minister outlined some fundamental pillars in the plan and budget to promote inclusion. This includes the promoting linkages with the industrial sector and raising productivity in agriculture, quite critical. Strategies to promote import substitution industries and export-oriented value-adding activities, strengthening the business environment, for the private sector, and I think I see the emphasis for SMEs, which are critical for creating jobs. Sustainable exploitation of natural resources, again, the linkages with the domestic industries. I've seen a special proposal to introduce special investment promotion incentives for domestic beneficiation of strategic minerals. We can't export these minerals as they are. We want them to be used to manufacture the commodities for which they are targeted for in the country. And of course, the issue of skills development. And this is very important because we are talking about the demographic dividend because of the young population of Tanzania, 76% below 35 years of age. But we can only harness this dividend if massive investments are made now in skills development. And obviously continued effort to improve infrastructure and emphasis on rural development. This is something that I've captured. I have also noted emphasis to promote supervision of and monitoring of implementation of plans. Well, that's really key. We have been talking all the time about issues of implementing a particular budget, but we don't really know whether the implementation is actually in line with what was planned and approved by the parliament. So the minister, the office of the president responsible for planning and investments have put out a plan which is based on 3 features: prioritization and transparency, discipline of implementation. This is very critical. You must implement what you've planned and approved, but also the framework of accountability that has been proposed. And that's going to be key. We need to see if that will be effectively implemented. In terms of the expenditure and the revenue framework, we see that the government has put in place trying to amend the contingent fund so that they can identify other sources to fund this contingent fund to be able to deal with shocks, including climate-related, such as infrastructure. And one element of this is the financing of this fund through the windfall profits. I think the Income Tax Act will be reviewed again to see how this windfall act can be implemented. There's also emphasis on the medium-term revenue strategy, because this is important to promote efforts to expand the tax base so that the principle of equity here can apply, strengthening tax administration, but also efforts to strengthen public awareness to encourage voluntary tax compliance, and definitely what we call a reciprocal obligation. I've seen an emphasis on expanding roles of local government authorities in developing particular agricultural sectors and livestock, establishing a framework for which these local authorities can collect taxes, but also invest them in sector development, this local economic development, which is a very good emphasis if the framework, the proper framework can be put in place. This goes in hand also with increasing financial capacity of local government authorities by retaining 20% of property taxes and not from land rents, which will definitely strengthen the collection capacity of local authorities, but also increase their capacity to invest in local economic development initiatives. We have also seen various fiscal measures to encourage gold purchase by the Bank of Tanzania in efforts to stabilize forex supply in the country and to protect the value of shilling, which is going to be important. But what we have also seen is various fiscal measures that are intended to protect domestic manufacturing. If they're able to implement that and also provide for an opportunity to increase sector competitiveness, I think that will be critical. And finally, I would like to make some general recommendations, which of course I have seen in the minister's speech, the Minister of Finance. The role of public procurement in promoting local economic development is very important. I've seen the proposal to increase the 15% margin for local preferences in procurement, and also the threshold up to 50 billion. We do hope that the regulations will be adequately enforced in the procurement framework. Definitely in terms of strengthening the M&E through the Planning Commission, I know the Planning Commission provisions of the Act gives it that legal mandate, but it's important to institute public expenditure reviews that will be implemented independently to be able to actually help to ensure that these sectors are spending in line with the priorities that are established in the plans and budget. And finally, once again, I would call for the government to consider providing pre-budget highlights early enough or exposure draft of the budget so that stakeholders can have adequate time to discuss. Even the commentary like this can come even before the budget so that our recommendations can actually be part of the discussion that follows in the budget. I will stop here and let others continue with the discussion and presentation. Thank you, Jennifer.
Thank you very much, Dr. Donald Murray. That was insightful, that was comprehensive. So I think we've seen from Dr. Murray's presentation, and I think what the minister is looking, or what the government is looking at, is seeing the country's economy being transformed. However, I like the point that was raised by Dr. Murray, where he said that GDP is growing, but if you look at poverty reduction and job creation, they're not growing as fast as the growth in GDP. So I also like the point he mentioned about being accountable. So we have a number of budgetary measures that have been put in place, which the country needs to implement, but still there are people that need to remain accountable to ensure that we are seeing our country's economy grow to a pace that is at least equal to our neighboring countries. So thanks a lot. We will have a session later on to deep dive into the topics. As of now, I would like to welcome Sabato Mwaliki to give us the key highlights and tax changes. Over to you, Sabato.
Thank you very much. My name is Sabato. I am a senior manager at KPMG. I will now go into the simple stories about taxes. So digest a bit about what these tax changes or the fiscal policies that have been proposed means to you as a business and means to you as an individual. So I'll take around 20 minutes of your time to discuss the tax changes, starting with the income tax. But before we dig into the income tax, one area that the minister actually started with, if you listen to the speech yesterday, he started by giving a warning to business community or the businesses that are deducting or rather acting as agents to collect on behalf of the government, but then not remitting those taxes to the TRA. So he started by actually giving orders to the TRA to say, take strict legal actions against those people, including taking them to the court to ensure they pay. And that was actually a reflection of the most recent speech that he gave in the parliament, saying if you are collecting on behalf of the government taxes like VAT, pay as you earn, withholding tax, and then you do not remit that taxes to the revenue authority, then it means then you are collecting somebody's taxes and use that tax to maintain yourself. And he was very categorical when he said such kind of taxes cannot have time limits in terms of collection. So that was the opening remarks for him. And I thought I should start with that because it is probably translating to all the recovery measures that you have seen recently from the TRA. And if you have not been issued with demand notices or probably agency notices, or at least intention to recover, then you must be a very lucky person. Otherwise, then you should be in the same cap with that. So that is one. Two, you will note that most of the tax changes that have been proposed in this budget are driven by the equity principle. I think what the minister was trying to do is, if one group of people is paying taxes, then another group of people who are earning something similar should also pay taxes. So he's trying to, go by the equity principle of taxation. And I think in this case, focusing more on the horizontal equity, we're saying if similar people earning similar income, then they should pay similar taxes. That can be distinguished from the vertical equity, where then you say whoever is earning more should pay more. The last part is that I have learned from the changes that I saw yesterday ahead from the parliament, is these tax changes are specifically intending to protect the local industries and some to shape behavior, especially on the gaming activities, as well as what we normally call sin taxes, excise on tobacco, on alcohol, and the likes. But I think the ambition is to push for new revenue streams for the government, because the minister mentioned the 6 big projects that the country is running, and more specifically, he was making reference to looking for funds for the universal insurance. The universal insurance coverage, the SGR, the hydropower project, tuition-free education, and the likes. Now, let's start with the income tax and see what changes were actually proposed by the minister. One is to now recognize institutions dealing with advancement of health services and environmental conservation as charitable organizations. So the minister is proposing to actually add these institutions to the definition of charitable organization. The commentary I would want us to note from there is, although a charitable organization is defined, that charitable status is not automatic. You still need to apply and obtain a ruling from the commissioner to recognize you as such. So much as the minister is proposing to recognize these two institutions as charitable organizations, it is probably not the end. Those organizations will still need to apply for charitable status and get a ruling from the commissioner to be recognized as charitable organizations. And now, if you go read the definition of a charitable organization, it's very, very limited, saying if you are established solely for the performance or for alleviation of poverty or for advancement of education, and for this case, for advancement of health or the environmental conservation, but then it uses the terminology solely. So if you have any other revenue stream that is not relating to advancement of health services, you probably won't qualify as a charitable organization despite this recognition. I thought that is important for us to take, because then we may end up saying we are now formally charitable organizations and end up in an exposure for non-compliance. The other item is exemption on tea processing companies from the alternative minimum tax. Alternative minimum tax is a tax that you pay when you have made 3 consecutive losses. So you pay on the 3rd year of making losses, and that now is based on the turnover, the top margin. Now you'll be asking why exemption of tea processing companies while agricultural companies are already exempted from alternative minimum tax. So that should be telling you tea processing companies are not agricultural companies. The term agricultural business is actually defined to specifically exclude processing of agricultural produce. So that is, again, a key point you should take. The fact that you deal with agricultural products, it does not necessarily mean you are an agricultural business for the sake of alternative minimum tax. So that's why you see now there is an exemption on agricultural business, but there was a necessity to again exempt specifically tea processing companies. The other part is on electronic receipt. These electronic receipts are now required to support or to evidence purchases. You, as a business community, I'm sure you have had cases where the TRA comes, do audit, and then they tell you, we are going to disallow training costs, we are going to disallow this one cost and that one cost. It's simply because you have not been able to support these costs with electronic receipts. Now, in the past, we used to simply say, which law are you using? Because the law simply says the expense is deductible if it is incurred, 1. 2, fully and exclusively for business purposes. So if I can prove that the expense was actually incurred and indeed incurred for business purposes, then this expense is deductible, whether it is supported by voucher, by just a signature, by, as long as I can prove it was incurred, then yes, this is deductible. But now I think the TRA is given a tool to use and say, the law specifically says, if it's not supported by electronic receipts, then this is not incurred. It's not a deductible expenditure. This is probably going to capture most of us, because in essence, there are some of the costs that you cannot support with electronic receipts. And so my only hope is that maybe the finance bill will come out clearly, putting those exceptions. If you are claiming for mileage allowance, for example, how do you support that with electronic receipts? If you're working in remote areas, like in the tourism industry, they work in the national parks, and they are incurring some cost at times to buy wood and sorts of those, where you just need to get the villager to sign an expensive voucher, and then you have an expense. Where do you get those electronic receipts to support the invoices, the expense? So that is an area that I am personally looking forward to see how it is worded in the law, to see whether there are any exceptions. So I would encourage you to be on the watch out, just in case, because I'm sure this will cut across all of us. The other change is the 15% contributions made by public institutions. So you have heard these public institutions giving gawio to the government. I mean, you can call it dividend, although legally it doesn't qualify as dividend. But you see now that is by the law. It's not by choice. In 2014 actually, there was a law that was passed to consolidate public funds in one fund called the Consolidated Fund. And then in 2015, a law was actually passed to tell those public institutions to contribute 15% of their quarterly turnover to that consolidated fund. So whatever they are doing is because it is there by law. Now, what the Revenue Authority has been doing is they go audit public institution or government agents, for example, Ngorongoro Conservation Area Authority, for example, TRC, for example, any other government authority institution, and they will see those costs and they will disallow and call it, this is dividend, and dividend should come after tax. So the discussion has always been, is this really dividend in the eyes of the Companies Act? Because then the directors were ought to show that it's reasonable that the business will continue if they declare dividend. But there's no any resolution to declare dividend. It's just by the requirement of the law. So now I think the government has listened that those gawio will be deductible for tax purposes. The other one is the revision of the presumptive tax rates that is applicable on resident individuals engaged in transportation of passengers. The specific proposed change here is affecting Daladala with a carrying capacity of 16 to 25 passengers. Although the minister said the intention was to reduce costs or to relieve the transporters from taxes, the change that is appearing in the minister's speech, it shows actually this tax has increased from 550 to 650. So I think that is probably an oversight, and I'm hoping that it will be rectified then with the finance bill. But we'll then do further analysis once we have seen the finance bill. Digital content creators, finally the minister knocked on your door and is trying to bring digital content creators into the scope of applicability of the withholding tax. And I think in that case, the minister proposed non-residents to withhold 5% from the 5% on payments made to resident digital content creators, and also income derived from the business of a digital content creator should be subjected to 5% withholding tax. So impliedly, you could say digital content creators will suffer 5% tax in Tanzania, regardless of where the payer is a resident or a non-resident. Because if it's a non-resident, then the non-resident is required to withhold 5%. If it's a resident, then it's required to withhold 5%. So either way, content creators will be taxed at the rate of 5%. Now, digital content creator, who is a digital content creator? We know the dictionary meaning, but we hope the law will be worded with very, very specific terminologies to ensure that then it doesn't become just a net for everybody, but covers specifically intended community. And then probably another clarity that is expected is how will the non-residents then they meet the taxes that they have withheld from those payments. Because a non-resident is a person that is not expected to have been registered with the revenue authority locally here. And so the only way you can remit tax to TRA is by being a taxpayer and filing return and remitting the tax. So I'm sure there will be some regulations or guidelines on how that works, and we are looking forward to that. The other change is the 2% withholding tax on payments made to sellers of minerals. Actually, very specific people, the holders of primary mining licenses. You will recall the Finance Act 2023 had actually introduced 2% final withholding payment on buyers of precious metals from these primary mining license owners. So now the 2013 change was only limited to precious metals. So the change proposed now is to extend that now to cover industrial minerals, not just precious metals. So you could conclude that the law is now trying to equate the position and tax them on everything, precious metals as well as industrial minerals. And industrial minerals is actually defined in the Mining Act. So in essence, this was to complete what was started in 2013 by introducing the 2% withholding tax. Now, the minister did not mention whether this was a final tax or not, but if you follow what was introduced in 2013, this is highly likely to be a final withholding tax. Another tax that has been introduced, income tax, is withholding tax on income derived from transfer of digital assets. This is again tricky and interesting at the same time, because we then need to define what is digital assets. As far as I understand, this could probably be referring to Bitcoins, cryptocurrencies, but those, if you go to BOT website today, you just see they are still not allowed. Actually, BOT issuing public notes to warn the public against those transactions. Now, is this a flag that now these transactions will be allowed and tax recovered, or the digital assets stated here something different than what we expect? So we're not sure, because then the minister's speech said there will be two changes. One is to introduce the withholding tax on digital assets, and two is to define what is digital assets. So it's premature to probably dig into that, but for now, it's worth to know that digital assets will be subjected to 3% withholding tax in Tanzania. The change in control provisions of Section 56, there was a mention of that, but the only question is whether that proposal is not redundant, given something similar was also done in 2023, where it was refined to say a change in control cannot be triggered by allotment of new shares or new membership interest in the resident entity. I think the only unanswered question has been, what if I'm allotting shares but in a non-resident entity, which then it triggers a change in the underlying ownership of the Tanzanian entity? Now, I think that is what we were all expecting, especially the mining sector, which is highly affected by Section 56. But instead, whatever was said in relation to Section 56 sounds or mirrors the same thing that was said in 2023. And so there's a question of whether this is redundant or really what is the intention of that proposal. There is again a restatement of the 2% withholding tax on agriculture and livestock and fishing and forestry. I'm using the terminology reinstating because it has been there before. It actually started in 2017. It was introduced in 2017. Then 1 year later, the government made a U-turn and removed it. Then it was reintroduced in 2021, July. Then 4 months later, it was removed. This year, again, it is here. I'm not sure if it is going now to graduate to a law or it is going to be removed again. But yes, here it is reinstated again. Now, tax losses has always been able to be carried forward indefinitely. You could carry forward tax losses indefinitely. But of recent, there has been a restriction of the tax losses that you can utilize in one go. So as of before the minister's speech, you could utilize up to 70% of you could utilize your losses to offset up to 70% of the chargeable income. But now that actually means you can be taxed to at least a minimum of 30% of your chargeable income if you are loss making. But now the minister is trying to increase that to 40%. I mean, then the losses can only shelter 60%. Then you pay taxes on the remaining 40%. I think the question there is what drives this? And the minister was very, very clear when he said the drive is to ensure government revenue is not delayed, is collected. Now, you'll be asking another question, is still collected by way of alternative minimum tax if I was making for 3 consecutive years? Then why is this another duplication, a double taxation, or what is really the intention? So those are the questions that we probably expected to see a more detailed law, and because normally the finance bill will also explain the reasoning behind the introduction of the law, we could get more insights on that. The last part on income tax is now a very good news, not just to financial institutions, but to all of us, to stipulate what are reasonable steps, for example, for you to write off debts as bad and write them off your books. Because what we have seen now, financial institutions relying on BOT regulations, any other person relying on their internal policy, where you have chased their data, say for 6 months, for 1 year, and management simply sit down and say, we do not reasonably believe this is going to be recovered, so we're going to write this off our books. And the TRA maintaining their position always that you cannot claim that deduction unless you have provided the evidence that you have taken all reasonable steps. But the question has always been, what is reasonable steps? And is reasonable steps to who? Is it to management or to the TRA? Now, I think that is going to end. I'm not saying it is going to end in a taxpayer's favor, but definitely it is going to end, because then they will probably stipulate what is reasonable steps, and so you can be having a checklist of whether you have met those checklists before you write the doubtful debts as bad or write them off your books. That is it for income tax, where there is an introduction of an exemption from withholding tax if a financial institution is borrowing from another financial institution out of the country. But the condition is that financial institution or fund should have an agreement with the government of the United Republic to provide concessionary loans. The idea or the essence here is to ensure the consumers in the country get it's a financial inclusion agenda to ensure that consumers get as reasonable rates in the interest as possible. Now to VAT, there are no much changes on VAT. I think the minister focused much on the income tax. So VAT, there are just few exemptions, few abolition of the exemptions, and zero rating of few items. So there's a number of exemptions for water treatment chemicals, for motor vehicles that will be imported by the military. And I think that is targeting some specific importations, because then it simply says for 1 year. So probably after 1 year, that is going to be abolished as well. So there is a number of exemptions that has been introduced, and the VAR is one of them, to ensure, I think that is targeting the AFCON, to ensure that sports equipments are delivered in the country at reasonably or relatively lower price compared to if there was no any VAT exemptions. Then there is a zero rating of gold to the central bank, and that is speaking to what some SOP started by touch basing, that the central bank is now recognized for gold reserving to curb for the shortage of dollar. I don't want to preempt that because the panelists will discuss that. So the other item is zero rating of goods for domestic refineries, to ensure we encourage refining some minerals in the country. And that is speaking to encouraging businesses to set up industries in the country. And that is, again, going to translate into our main theme for the event. There were also a few changes on excise and customs. You will note that in 2013, there was an inflationary adjustment to the fixed rates of excise, 10% for non-petroleum, and then 20% for alcohol and tobacco in 2023. But then there was a commitment by the government to say we are freezing the customs calendar by 3 years, which means a commitment to say we are not going to increase the rates for 3 years. So it seems the government has honored that promise, because there are no any increases in terms of the fixed rates, but rather I think now what they have done is look for new sources where they have introduced the excise duty to cover for whatever could be the loss. But the good news is the bottled water excise duty has been reduced from 63 to 58. So we probably expect from July, bottled water will go down in terms of pricing. If at all that difference makes a huge impact. But otherwise, there are no any changes, but introduction of new rates. We'll do a detailed customs and the excise webinar once the East African Gazette is actually published. It's normally published on 30th June. Then after, we'll do a very detailed customs webinar. So I don't want to dwell much on customs for now. Let me dig into the Tax Administration Act. Again, few changes there. The Ombudsman is now operating. In your fight with agency notices, I presume you have met the Tax Ombudsman. I personally have met him for one of my clients, but now is operational and more power proposed to be given to him, so then he can listen to objection decisions and other cases with the ability to resolve issues before they escalate to tax appellate bodies. The bad news is there's an increase in carriage points from 15,000 to 20,000. And what does this mean to you? This means if you file your return late, initially the penalty was 2.5% per month, but subject to a minimum of 15 carriage points. 15 carriage points times 15,000, that was meaning 225,000 per month. So now the penalty is going up to be 20,000 times same 15 carriage points. So to be maybe 300 as a bare minimum every month. Now that is speaking to your obligations to file, be it withholding tax returns. I've seen cases where taxpayers just pay withholding tax, but they do not file the returns. And those returns are monthly. So then TRA comes a year later and put the 20 carriage points, that is 300 every month times 1 year. You could be telling another story. So that is some bad news. But the other bad news is the maximum fine now increased to 1,000 carriage points. Remember, 1 carriage point is increased to 20,000. So if we are speaking of a maximum of fine of 1,000 carriage points, we are speaking of 20 million as a maximum penalty. How much was it before? 300 carriage points times 15, which was 4.5. What is this that I'm talking about? I'm talking about the penalties you are being assessed when you fail to use your EFD machine. So failure to use the EFD machine, you are given a penalty of 4.5 million. That 4.5 million is simply 300 carriage points, translated at TZS 15,000 for each carriage point. Now it is 1,000, translated at 20,000. That is 20 million. Bad news. Now, who is safe? Probably none of us, because TRI will always compare EFD versus VAT, EFD versus financial. If everything is fine, they now start digging into EFD versus standard rated sales. If all is fine now, we'll be looking into standard rated versus exempt. At the end, you probably missed one spot and the penalty is 20 million. So that is a call to wake up and push for compliance, especially on monthly reconciliations, to ensure you do not miss a spot and end up into paying. The other notable changes, and this is my last slide, is casual laborers employed in the execution of water projects have been exempted from SDL. What is that telling you? That is telling you casual laborers are subject to SDL. Because if they are not subject to SDL, why are casual laborers specifically exempted in this case? So that has been, I know that has been a discussion in the past with most taxpayers, and I know cases under objection where one person says, these are just casual laborers that I hire as and when I need them. They're not my employees. How can I incur SDL? And TRI says they are. So this specific exemption is actually telling you probably you need to be in a local. It is about employees who are casual laborers working in water projects, but it has a message for all of us. So railway development levy has gone up from 1.5 to 2%. So that increases your cost of importation. And that is coming amidst of the fluctuations in oil prices. That has a multiplier economic impact. So maybe the economist on the panel will try to touch that, but I don't know. That is what was proposed. So that takes me to the end of my presentation. Jennifer, back to you. Thank you.
Thank you very much, Sabato. That was insightful, comprehensive. There are some which we called bad news, but I hope and believe that all is well. So if we look at the budget, which is 49.5 trillion, about 59% of the budget comes from tax revenue. So it was obvious for us to see all the changes and proposed amendments that have been explained by Sabato, because then that is the only thing that will support the budget that the minister presented yesterday. We'll obviously see a more aggressive revenue authority in terms of tax collections. And that could be the reason why the tax avenues have also been expanded. So thanks, Sabato, for that. I would now like to welcome Irene Nanziri. Irene Nanziri is a senior manager sitting at the KPMG Uganda office. She works under the Tax and Regulatory Services Department. So Irene Nanziri will take us through the budget highlights from an East Africa perspective. Over to you, Irene.
Thank you, Jennifer, and good afternoon, our participants. I will be taking you through the highlights from the region.
Irene, we are unable to see you.
That's Rwanda, Uganda, and Kenya. So we can move to the next slide. And now, is this better?
Yeah. You can proceed. Um,
So
Jennifer, can you see me now?
we can see you, but I think there's something a bit off with your network.
Oh, okay.
Oh, we can
Thank
now
you.
see you and hear you.
So from Rwanda, okay, thank you. So from Rwanda, we have seen a reduction in the corporate income tax rate from
I think the Mima needs to switch off the video. That will help a bit on the internet. But if the problem persists, then we move on to the panel discussion and come back.
hello.
We can hear you.
Is this better?
I think this is better. You can proceed now.
Okay. So for Rwanda, we've seen a reduction in the. Okay, thank you. So in Rwanda, we have seen a reduction in the corporate income tax rate from our intention of reducing the tax rates to 20% in the medium term. Of course, the goal for Rwanda is, which is a good thing for the economy. We have also seen an increase in the minimum threshold for employees from 30,000 Rwanda francs to 60,000, and this means that there will be more disposable income for the spending power. We've also seen a tax amnesty that has been introduced where taxpayers who declare and pay the outstanding principal liabilities by 22nd June, there will be the penalties will be waived. And maybe the other thing in Rwanda that is also positive is the tax authorities have for taxpayers to pay arrears and the installment plans. So this is meant to encourage compliance for the taxpayer happening in Rwanda. I'll move to Uganda. There's been an expansion in the definition of a retirement fund only covered for retirement when you retired or upon death, but now they've included termination and also any conditions that are stipulated in the agreement. Previously, if you were terminated if your employer terminated the contract and therefore on you, it wouldn't be treated as exempt income, but now this will be treated as exempt income, which is positive for the employees. We've seen a new income or being included in exempt income in Section 21, and this is to encourage capital market authorities. Also, the disposal of government securities on the secondary market will be exempt effective 1st July 2024, and income and from manufacturing of electric motor vehicles and batteries, and also the income of course, those will be subject to meeting the conditions of capital investment threshold and use of local content and raw materials. There's also the income from specialized hospitals. Of course, question that we have is they have not defined what specialized hospitals are. So I think this will be subject to interpretation by the tax authorities. Still on to Uganda.
Irene,
Still on
there's
to
some
Uganda, we
background.
have seen the introduction.
There's some background. I don't know whether you can move.
Sorry?
I'm saying there's some background noise which is sort of distracting the audience. If you can either close the window or something like that.
Is this
Okay.
better?
Yeah. Um,
Hello? Yes.
I don't think it's better. Maybe you can just try and summarize, and then we can move to the panel discussion.
Okay. So in Uganda, there's also been the introduction of the definition of a PE. Before, we didn't have it in our tax laws, so this has been included. There's also the introduction of a commission, withholding tax on commission paid to banking agents and agents offering financial services. Last year, we saw introduction of withholding tax on insurance agents and mobile money service agents. So the banking agents have been included. We've also seen from a VAT perspective, the law has come out to clearly indicate that the person who purchases the goods in an auction is supposed to account for VAT. So the buyer is liable to pay for the VAT in an auction. We've also seen as an uproar among Ugandans was the introduction on VAT on the free issues that companies give to their employees. So where a company gives you maybe an old laptop, or you're working in a company that deals in gas, and they choose to give you maybe Christmas packages of gas, then they will be required to account for withholding tax at a rate of 18%. And also the threshold for applying for a VAT refund has been increased from 5 enterprise companies could claim for a refund, and also invalid or obsolete, and you intend to claim input tax from URA, you have, before you destroy those goods or dispose them off, you are required to write to the commissioner and inform them in writing so they can inspect the goods. We've also, just like Rwanda, we have a waiver amnesty for taxpayers, and they are required to, if you clear your outstanding principal taxes by 31st December, then interest and penalties will be waived.
Irene? Thank you, Irene. I think we can probably move to the next session, given that you're sort of breaking. Thank you for the insights that you've provided thus far. And maybe we can move the slides. All right, so let's now proceed to the panelist session. And as I had mentioned earlier, we have a good number of well-seasoned experts in the subject matter and from a diverse number of sector. So please move the slides. Yes, so for the panelists today, we have 5 people. We will have Dr. Donald Murray, who took us through the economic outlook. We will then have Mr. Jared Owando, who is the CEO of ICA Lion Insurance. He's a result-oriented insurance professional, and he has over 18 years of experience in the insurance industry. So we will get to hear his perspective of the budget from an insurance perspective. We'll also have CPA God Victor Limo, who is the president of the Tanzania Association of Accountants. He's also currently working as a tax and audit practitioner, and he's a senior manager working with Anglo Gold Ashanti, Geita Gold Mine, as a senior manager in tax and disputes resolution. So he also has ample experience in the mining sector, having been associated with the industry since 2004. We'll also get to hear from CPA Doreen Mangesho. Doreen Mangesho is a seasoned finance professional. She has over 14 years of experience in accounting, finance, and taxes. She's currently the Director of Finance at PASS Trusts. And she's an exemplary figure among women. She was recently recognized as one of the top 25 women in the Women in Management Africa for 2024. So we'll get to hear also her perspective of the budget from an NGO sector perspective. We also have Peter Nalitolela, who is the director and head of Treasury. I'm working with NBC at the moment. He is also a certified board director, and he has a lot of experience in finance and banking. He also has ample experience in the academia space. So these are the people that will be taking us through the panel discussion. I hope they can all hear me.
Yes, and
You can
thank you,
just
Jennifer.
say, you can
Yes.
just say hi.
Hi.
Hi. Hello.
Doreen?
Yes, I'm here. Hello.
All right, I can hear you now.
Yeah.
But we
Hello.
can't. All right. So maybe we can start off the discussion with looking at the theme that we have. And this is a question that I'll pose to all the panel members. So they'll all get a minute to just give their views. So the main theme for this year's budget is sustainable economic transformation through fiscal consolidation, investment in climate change mitigation, and adaptation of for improved livelihoods. That's a long title, but yeah, looking at that theme and also looking at the fiscal reforms that have been proposed in the budget, what are your views in terms of whether the reforms that have been proposed actually reflect the theme that we have in place? We can probably start with Jared.
Thank you, Jennifer, and good afternoon, my fellow panelists and the participants. Of course, the topic is quite long, but I would pick a few keywords: the sustainability, the transformation, and improved livelihood. In my opinion, yes, the budget is yes and no. There are few parameters that has been discussed by my fellow presenters, and one of them, as a yes, would be improving the strategic projects that will be improving the livelihoods, the projects like SGR, the hydropower, the free education, the subsidy program. And in my area of interest will be on the national health insurance, that there will be a fund for the universal health. There will also be supporting the local industries that the zero VAT on several domestic goods are attached to. The retirees also will be laughing back to the bank as the lump sum amount has been now improved. The tourism license board of the businesses from 2,000, I think, dollars to 3 million. Those are, I think, key areas that would improve the livelihood. But then there are areas that we we've seen the natural gas industries coming to an effect, and automobiles that operate through the natural gas. And there's a proposed charges on compressed natural gas. So this would be, I think, an effect. The industrial development levy, especially for the traders, even though it is a way of improving the domestic industrial productions, but then it's an area that would, in one way or the other, affecting the trade. And then some tax on the digital content creation income that will also be affecting the digital content creators. Thank you, Jennifer.
Thank you very much, Jared. Good Victor, what is your take on this?
Yeah, no, thank you, Jennifer, and good afternoon, my fellow colleagues and all attendees. For me, I think there are a number of issues, and what the minister has tried to do is actually strike a balance. Like Jared did say, it is a yes or no, but I would say, he's tried to find a balance in terms of making sure that he meets some of these key parameters in terms of sustainability, transformation, and improved livelihood. And for me, for example, when you talk about sustainability, especially with the environment, I think the extension of recognizing organizations that are dealing with environmental issues as NGOs is a good move towards us having a very sustainable sort of environmental issues going forward. We now have a lot of concern and discussions on environmental matters. And as a country, I think it's a good move towards that direction. But also on my part as a mining specialist, I think there are a number of issues that I've picked, especially in terms of creating more empowerment to our local refiners. We know that from 2017, when we had this very aggressive legislation that was passed, there was a lot of move towards making sure that we improve the local content in the country. So this year we've seen the minister significantly reducing, for example, the royalty rate from almost 6, previously it was 4, to now 2% for all gold that will be supplied to our local refiners, which means you're putting more emphasis on people refining in country by reducing the cost. So I think that is very important. But also in terms of improving livelihoods, there's a lot of focus now. We've seen with the AFCON incentives that we've given, especially on the video assistant referee. It's one of the exemptions that I think is targeted also to address the youth interest in sports, but also that is coming hand in hand in terms of widening the tax base. So we hope now sports will also be becoming part of the main contributors towards our fiscal collections. So these measures to improve the widening tax base are most welcome, and I think they go hand in hand in terms of improving the livelihoods. Let me stop there and give others a chance to comment. Thank you, Jennifer.
Yeah. Thank you for that contribution. And you mentioned something to do with the NGO sector, and maybe I would now like to hear from Doreen, and then we'll go to Dr. Donald. Doreen, what's your take on this?
Thank you, Jennifer, and good afternoon all. From my perspective, is the budget is taken into consideration as looking for the establishment of the fund. First of all, having these two institutions to deal with the health service and environmental conservation, particularly to address the issue of support global fight against climate change. This is a great move because as looking for the NGO, focus is to improve quality of life for person by promoting social livelihoods, economic welfare to the community. So this is a great move from this budget perspective. But if you listen clearly from the minister yesterday, to tackle climate change challenges, it's required to change resource use, minimize waste, and develop new environmental friendly products and services. So if you look to the speech, the minister emphasized to all accounting officers to continue holding virtual meeting and encouraging paperless. This is a great move if the government is also walk the talk regarding climate change adaptation measures. So I think it is encouraging to see that it speaks a lot about the issues of climate change. But to add as well, I've seen the budget taking into consideration the Contingent Fund Act, the creation of a specialized fund dedicated to financing emergency repair. This is a good move, as this is considered as a preventive measure towards climate change. So for me, I can say shortly about that for now.
Thank you, Doreen. You've expounded very well in terms of climate change. And I believe that the changes in climate obviously affect the society and the individual. So if the government is able to tackle that, then probably we will be able to improve their livelihood. Dr. Donald, and then we'll wind up with Peter.
Yes, thank you. As my colleagues have said, of course, what I see is, of course, some attention to productive sectors, and productive sectors are key to transformation, which you say is the theme of the budget. And particularly more spending on agriculture in terms of attempts to raise productivity in this sector. It's up to everyone to follow to see whether the actual spending will actually be in line with the budget objectives. But also I've seen some measures to protect domestic manufacturing, particularly those that are of import substitution nature and those that can promote value addition, which is critical also component of transformation. And I've seen some elements of efforts to promote private sector growth, particularly addressing the business environment challenges for SMEs. I think it will be important to see whether the finance bill will actually be very clear about specific measures, fiscal measures. I've seen a lot of measures introduced to promote domestic value addition, particularly minerals, which is also critical to strengthen that linkage between mining sector and the industrial sector. And finally, of course, the contingent fund being allocated some sources to ensure that climate-related disasters are immediately addressed. What requires to be done going forward, of course, is to ensure that these kinds of climate-related funds for adaptation actually flows down to local government authorities and the communities where these impacts are seen to be quite significant. Yeah.
Yeah, thank you, Donald. I think that also speaks or takes us back to the accountability part, which you mentioned as you were presenting. Yes. Peter?
Okay, okay, thank you. So I won't repeat what my fellow panelists have said, but just picking up from what Dr. Mari has spoken about in terms of economic transformation. So a couple of things that resonated with me is number one, the mentioning of things like investing into increasing exports and also doing import substitution. That goes a long way towards number one, diversifying our sources of different economic production, but it also goes a long way towards reducing the pressure on the currency, which has multiple effects on the economy because being a country that is usually a net importer, we've suffered quite a bit whenever we've seen there's lack of foreign currency liquidity and the currency ends up depreciating. So that would be one. But also along the same thing of, along the same line of economic transformation, generally speaking, I saw a lot of emphasis towards looking at different sectors and moving away from concentrating on specific sectors and areas of production only. And also along looking at fiscal consolidation, there's a lot more emphasis now in looking at expanding the tax base. And the minister was very, very deliberate when he was speaking about fairness when it comes to paying taxes and emphasizing that there can not only be one group of people that pay taxes, but others that in the same or more are not paying. The more efforts and the more discipline put around this, it will help in growing the tax base, which will go a long way towards fiscal consolidation. On the economic, climate change adaptation and livelihood, etc., I won't repeat what Edafo said. Just one thing that came to me as a surprise was the introduction of the levy on motor vehicles that are powered by CNG. If we're looking at moving towards investing in climate change, I thought we would have given more of an incentive in that space. Thank you.
Thank you very much, Peter. And thanks to all the panelists for your contribution to that first question. As for the audience, if you have any question, please feel free to post those on the Q&A section, and then we'll have a session later where the panelists will respond. So I've seen like 4 questions already posted. So just keep them coming. All right, so maybe now we can, I'll post the next question to Jared. So Jared, looking at the tax challenges that are currently facing the insurance business, and given the fact that you are an expert in the insurance industry, and I know one of the challenge is on VAT. So what do you think in terms of the budget that was presented yesterday? Has it addressed some of the challenges that you're facing as a sector?
Thank you once again, Jennifer. The budget presented yesterday, I think, must have forgotten the insurance industry. And this is something that we've really talked about, discussed to the government on how to improve the protection of the society. And Jennifer, you must agree with me, a protected society is a protected wealth for sustainability. Right now, the cost of buying insurance service is so high simply because there is 18% VAT on the simple premium. Somebody who would have bought comprehensive cover would shy away because of the huge tax on the premium. Vis-a-vis the practitioners, the intermediaries, the commissions that we also pay for the distribution of these services are as well taxed. There is 18% on this. Vis-a-vis the person who just got an accident is also required to, as you pay, is also required to pay 18% VAT on the claims. So this has not been addressed, and it's something that we thought that the budget would have addressed the issues on the VAT and maybe transform the VAT to levy. There are also parameters that we've seen, the tax credit on life to motivate insurance uptake on life or on medical insurance. It's good that the universal health is coming to the market, and this will really improve the livelihood. But this does not relate to the VAT, and this is the elephant in the house for the insurance practitioners. Yes, we agree that the premiums will reduce based on the government initiative to improve the local manufacturing industries by controlling the imports. But then at the same time, the manufacturers would have to pay the VAT on the premiums that they pay. So we will also send a plea to the government and to the ministries, to the experts, to look at the VAT aspect on the insurance premiums. Thank you.
Thank you very much, Jared. It's sad having said that the budget forgot the insurance industry. So maybe I can now pose my next question to Good Victor. Good Victor, I understand that you have ample experience in the mining sector. So there have been various fiscal incentives that have been proposed in the current year's budget. Which one attracts your attention from a mining sector perspective? And also, what other reforms would you have expected to see in the budget that was presented by the minister that touched the mining sector?
Yeah, thank you, Jennifer, once again. As opposed to Jared, the mining sector is never forgotten. We are used to getting blows every other time, but so this time, of course, there are a number of incentives. But if you look, if you dig deep to the incentives, they are targeting down the value chain process. You see, if you look at what has been proposed in the budget yesterday, it is more focusing on how to integrate the value supply the value supply chain of the mining industry. So the notable ones, of course, is the reduction of the royalty. And you know, royalty is one of the significant costs in the mining business. This is a turnover cost, so it is pegged on your turnover. And it is good news to note that there is a proposal to reduce the royalty rate, which was actually 6% to 2% when you supply locally, either to BOT or to the local refiners. But as a matter of fact, is the BOT will always end up buying from the local refiners and not directly from the mining companies. This is a good move because in the last 6-5 years, as a country, there's a lot of capacity that has been built in terms of the local refining, which is a good thing. And you know, with the local refining, it means then you sell locally, you have more employment, you're widening the tax base, and the value chain is increasing. I think the challenge with this remains to be what we call LBMA accreditation. This is the London Bullion Market Association, which requires refiners to also be accredited for international recognition, which takes a bit of time. But we hope with this significant reduction and incentive that's been given, it will still entice the local gold producers to participate and trade locally. But also the notable one in terms of the incentive for us, which we are actually celebrating, is the refund, the VAT refunds repayment within 30 days from the date of submitting application for refunds. Refunds for the sector, as you know, the mining companies are all exporters, so they end up with significant VAT refunds every other month. And when these refunds are not refunded on time, this eats onto your working capital. So with this new proposal, we are expecting a huge improvement in terms of the businesses, and probably we will see an increase in terms of our scope of services and of mining. In terms of what we would have wished, and Dr. Mari did mention, there has been a focus on the critical minerals. As you know, as a country, we have a lot of projects now in terms of graphite, in terms of nickel, that are almost on the development stage, but most of them are not kickstarting. And the main obstacle has been Section 56. So talking of what we would have wished to see, would have wished to see a clearer Section 56 narrative. Looking at what was proposed yesterday, it is still gray as to whether that will address the issue of financing. Most of these companies that are just about to develop, they need a lot of financing. If you look at Kabanga Nickel, for example, one of the biggest nickel projects we have in the country, they are almost at the financing stage. If you look at the graphite projects, most of them are also looking for financing. But any financing that comes at the moment with the current legislation we have under Section 56, it will definitely trigger underlying control. And this is not an incentive for most of these investors. So we would have wished to see a more clearer Section 56 that would allow for financing and kickstarting of this project. Also would have wished to see royalty deductibility. As I've said, royalty forms a very significant cost for the mining companies. At the moment, royalty is not deductible. And as a matter of fact, as a result of not being deductible, you are adding almost a 30% increase in cost. And you are actually making a de facto royalty rate to be 7.8% of gold. You know, royalty of 7.8% instead of the 6% before these changes. So this is in pushing the cost upward. But also CSR. CSR, corporate social responsibility, has also remained non-deductible for some time. But as you know, it has now been made a mandatory contribution. So it's no longer a wish that you want to say, I contribute so much. No, it is now a legal requirement to contribute to the CSR. So we would have wished to see, that also becoming a deductible expense for tax purposes, but that was not featured in this year's budget. The other one is on the ring fencing. I think every mine that you see operating in the country today is as a result of extensive exploration. So we have a lot of exploration that has to go in play before you have a mine opening. Now, under Section 65B, we have a ring fencing provision that actually is disincentivizing, the junior explorers who are actually key in terms of making up a way for opening of big mines. So would have wished that the ring fencing provisions be revised. And just to provide you some context, for exploration, just like any research, you would have a lot of grounds, more than one license that you would be exploring. But with this current provision, ring fencing provision, it restricts, deduction of costs incurred on exploration against the license that you would have, you'd have found some viable ore to mine, mineable ore. So it sort of disincentivizes, and most of the exploration companies, have shied away. So what we are seeing is we may not have a booming industry, mining industry in the future, if we don't really encourage the junior explorers by making sure that we amend some of these provisions that are letting us down. So that would be my wish list. It would have been long, but let me stop there for now, Jennifer. Thank you.
Thank you, good Victor. That's a sizable wish list. But at least the minister did not forget the mining sector, based on the comments that you've explained. And we also understand that mining is our biggest player in our balance of trade. So it's something that the minister did not forget. But yes, there are things that we wished for him to include, but they did not. So maybe now we can move so we've heard from the insurance, mining. We can now maybe move to the banking sector. Peter. So Peter, as Sabato was presenting the key changes, there's something that he mentioned to do with procedures to be stipulated for recognizing the bad debts that are written off. And so we've also recently seen aggressive recovery measures instituted by TRA. So maybe, Peter, you can tell us how this has impacted the banking sector. Has it impacted your relationship with your clients? And also, do you think that the budget has really addressed the procedural requirements for recovery measures?
Okay, thank you, Jennifer. So there are two parts to that. There is a part where there is some sort of clarity that is being provided between what is considered allowable when it comes to banks, for example, whenever they have to write off loans, and there's disagreement around whether there was sufficient efforts put towards that recovery. As an industry, I think there's something that still needs to be understood. As it was shared earlier, that it has been provided clarity in terms of if you show the best efforts from who, there has to be a bit of that clarity that has to come in. So that's still early days. For now, we're happy that there is some discussion that are happening. As a banking industry, it's something that had been a cry for a very long time, because on one part, you've had to write off, but then you go to the taxman, they still tell you that this is taxable. So it's a double whammy on your capital. And if we get more clarity and this is more easily applicable, then it actually help the consumers because it will reduce your cost of borrowing. If you have a good enough collateral that you have pledged, and unfortunately things go sour, and the bank has to recover by disposing the assets, the recovery efforts, if they become cheap on the part of the bank, it will also mean that the costs that they would have asked for the bank to lend to you would have been cheaper from the beginning. So that would be the first part. But then there is another part around the TRIA's recovery. And I'm assuming that on this, you meant where there was some efforts from tax officers to recover what they deemed that were all dues from clients by issuing agency notices, etc., to banks. Yes, that act had actually had an impact on the relation between banks and clients. And on this, I'll put a bit disclaimer and say that even though I'm a banker, I do not speak as an NBC employee. I do not speak on behalf of NBC, but I speak based on experience that I have from the market. Because clients most of the time will come and say that nobody was my money who allowed you to allow someone else to take it. And it often have to explain that it's a law if we give it in trouble. But procedure-wise, is around, for example, the VAT refunds, that will go a long way because yes, the client would have taken a hit on day one, but if the money comes back sooner, then at least they wouldn't be as angry with us as a bank by being an agent as they've been in the past, for example, where the money hasn't been able to be recovered. For example, the empowerment of the tax ombudsman office. This is something that has been a couple of years now in the making. It's finally here. Hopefully it will be operational as expected. And this will reduce a lot of some of the issues we have seen whereby there's disagreement between the revenue authority and the client, and all of a sudden, without the client having any opportunity to go to complain and to get someone else to listen to their side, the bank is being told that these are funds withhold them and debit their client's account and pay us. So this will help because to use some of these issues. What the budget is proposing, there also has to be change in attitude, generally speaking, from some of our TRA officers and the TRA in general. And it's been said several times by some of our senior leaders that while tax collections is mandatory, it's important for economic development, it shouldn't come at the cost of doing business. So that would be my 2 cents for
now. Yeah. Thank you, Peter. So I think it's a tricky situation, especially for the banks when the government wants to collect money and you need to explain to the customer that we need to release these funds to the TRA. Yeah, so thank you for that clarification. Now we can now move to Doreen.
Yes.
So Doreen, if you look at the budget and from where you sit as the finance director for an NGO, what was your wish list? And do you think that the budget has covered your wish list?
Thank you, Jennifer. Looking at a non-government organization NGO, it's typically to work towards public or social welfare goals. Yeah, looking at this amendment to the finance, specifically try to answer some questions in the specific sectors like agriculture, social, and so on. So we're working in NGO sector for more than 10 years, especially in a charitable organization. Seeing that obtain the proposed two institutions to be part of the charitable institutions, this is a great news because we can really see the impact of NGO sector in the community. It creates employment massively and as well poverty eradications. So this is good, and this is what one of my wish list, because NGOs are obtaining a ruling to the Commission of General confirming that their charitable status, it will reduce the income tax burden. I think this Mr. Sabato explains very well when he's explaining income tax update, income tax, I think, at that time. So we are looking forward to have more definition regarding this health sectors and environmental conservation, together with those who say solely dealing with health and whatever. So this is a great move, but as well, another thing, sometimes you can have a ruling, but later on, TRA interpretation towards organization, maybe if the organization was founded and operates exclusive for the public's relief from poverty or distress, sometimes they come to say, no, we see that you are no longer a charitable. You have to revoke your charitable status. So a lot of the tax disputes took a long time to be resolved. So the proposed amendment to the Tax Administration Act to empower the tax ombudsman in hearing and addressing complaints emerging from tax decision or procedural service and administrative matter to such decision or objection. This may help to fast-track resolution pending to tax disputes. Previously, the principal mandate of the tax ombudsman was limited to address taxpayer complaints on tax administrative matters. So we are looking forward, as coming from an NGO who are looking for having a charitable status, we are looking forward to meet with this tax ombudsman. Maybe our tax disputes can be resolved. Another thing, currently I'm working with the agriculture sector, in which one of the things now we advocate is the issue of climate change. Now we have our own theme of inclusive green growth in the agriculture. So one of the adoption strategies we support is leasing of green technology. So the challenge is most farmers are unable to afford, to purchase equipment that are supporting environmental friendly. So although the budget has proposed VAT exemption for power tiller, which is being considered environmental friendly, still needs to see more effort is in place for machines or equipment that are promoting the use of renewable energy and low carbon fuels as mitigating measures towards climate change. That's all I have for now. Thank you, Jennifer.
Thank you very much, Doreen. At least we can see that the wishes that you had for the sector was sort of covered, though there's room for improvement based on what you've highlighted. So yeah, we can now move on to, we can pose a question now to Dr. Murray, Dr. Donald Murray. And maybe before I ask the question to Dr. Donald Murray, there are two questions that I would like to read from the Q&A so that the members of the panelists can sort of digest and then provide a response later. There's some that have already been answered. So if you asked a question in the Q&A and it has been answered, if you're still not satisfied with the answer, you can type it again. The one that is still unanswered, can the panelists comment a little bit about the digital content tax and how it will work for the Tanzania budget? Can the panelists comment a little bit about the digital content tax and how it will work for Tanzania budget? And then the other question, isn't it strange that the minister missed out the real estate sector, which of recent has registered high-level sounding growth? All right, so my question to Dr. Murray is, if we look at the budget, we're seeing a significant growth, a growth of about 11%. I'm looking at the growth from 44 trillion last year to 49.4 in the current year budget. So what does this mean to you from an economic perspective?
Thank you. What the budget does really is to outline the spending plans. And the spending plans tend to stimulate the economy in terms of the investments that where this funding are directed to, in terms of infrastructure, construction, but also other sectors. So that when you look at the revenue, which really stipulates how the funds are going to be raised on one hand, and on the other hand, you look at the expenditure, how these funds are going to be spent. They tend to influence three critical things. One is the resource allocation in terms of from which sectors, but from which economic agents to the other. The second one is income distribution. If you tax more progressively and then you spend more on services that are consumed by the general public, then you are kind of redistributing income. And finally, of course, guaranteeing the economic stability so that economic agents can continue to produce goods and services. So budget increase, what it does reflect, of course, it also reflects an increase in the quantity and value of economic activities over time. If you look at the budget only 10 years ago, 2014, 2015, it was about 15 trillion. As the economic activities have increased over time, population is rising, more schools are being constructed, more teachers are being recruited, there are more farmers, of course, producing, there are more livestock population. So economic activities are rising also as the spending requirements of the government, and therefore the resource needs are expanding at the same time. So budget is influenced on one hand by the size of the economic activity, but it also influences aggregate demand, which spurs further economic activity. They're quite closely related. So the more you see increase in the size of the budget, we also see the commensurate increase in the aggregate demand for production activities of goods and services also increase, and more public spending on infrastructure, public spending on buildings, education facilities, and health facilities, as those needs also increase with the growth of the economy, population, and so forth. So I think this is the relationship that I clearly see between the budget and the GDP growth.
Thank you, Dr. Murray. Okay, so there was a question. Can the panelists comment a little bit about the digital content tax and how it will work for the Tanzania budget?
Yeah, so Jennifer, if I may just go first before the other panelists. I know from the budget speech, it is not very clear, and I'm sure there will be more clarity, hopefully, once we see the Finance Act. But I think it is key, one, to understand what is a digital asset, and that is very important. And for me, I would define a digital asset as a non-tangible asset that is created, traded, and stored in a digital format. So in the context, for example, of blockchain, digital assets will include things like cryptocurrency and crypto tokens. Now, what you pick from yesterday's budgetary speech, I think there are two issues. One, the government is targeting one, income generated from the platform owners of digital assets. That's number one. And there is, of course, a withholding tax rate that has been proposed of 3%, but also it is targeting the digital content creators, okay? And here you've got that withholding tax of 5%. So the modalities and how it's going to be executed, probably we'll see that in the Finance Act. But as for now, I would say at least we know all the income that is going to be generated from by the platform owners who facilitate the digital assets trading. It will now be subject to tax, but also the digital content creators will also now contribute to the tax collection in terms of the withholding tax. I'll stop there for now. Thank you, Jennifer. Sorry, there was a second question, if I'm also just comment on that in terms of the real estate. Well, it has not been completely forgotten. If you heard the minister yesterday, he actually talked about empowering the local government more through the land rents. And I think we all know the local government are very close to, the land surveying and the rest. So I believe with that capacity building to some extent, we might see a bit of improvement in terms of how the whole administration of surveying our land, and that is part of the real estate, there will be a lot of improvement. So I think it is not completely forgotten. There's some comments on that, and probably will be more informed with the Finance Act when it's out. Thank you, Jennifer.
Thank you, good Victor.
So, Jennifer?
Was there anybody else?
Yes, Jennifer, if you allow me.
Okay, a minute.
So I'll just be very quick. The reason why I volunteered to answer is because there are a number of questions that are coming back in different forms, but they all relate to using US dollars as a tender of currency in Tanzania, dollarization, etc. Some of which I've answered, Dr. Mar as well as Sabato, I think. So generally speaking, the questions are asking, what does this mean? What the minister said around trying to reduce the use of dollar as a means of payment in Tanzania. And number one, there was a question around, is this effective that July 1st? Then all of a sudden you can't pay, you should refuse to pay any invoice that is issued in dollars. And I said, number one, this is not necessarily a new law. It was just a reminder that has been always the law, but it's just that we've never really practiced it. Even the minister himself mentioned, even government agencies do charge quite a few fees in dollars, with something which even us as an industry have often challenged the questions whenever we meet the central bank, for example. And there's no clarity, as I think Sabato pointed, on what this means exactly. But one thing I would advise you is that wait for clarity, because in a particular instance, let's say, for example, a paying government fee, you can't just refuse to pay it just because it's July 1st and the minister said so. You might actually end up getting into trouble. And let's wait to see if there will be further clarity, or it was just maybe a reminder from the minister that, remember, Tanzanians, this is the law, let's try to adhere to it. And the whole principle around it is the fact that, and Dr. Mar has tried to explain this, is if everyone starts charging in dollars, it means that all of a sudden you're earning in shillings, but now we have to start looking for dollars to come pay rent in my house or to come pay at my hotel, etc. And then all of a sudden we're actually creating a false import market. So dollar should only, or foreign currency general should only be paid when you are importing from somewhere else, unless there is a specific reason contractually why you should pay in another currency other than Tanzania. But if it's an economic activity within Tanzania, ideally you should be paying in Tanzania. That's the best answer I can share for now, but that's what the intention of the minister statement was. It wasn't necessarily trying to say that this is the law going forward.
Yeah, thank you for that clarification, Peter. I think it was clear. I'm seeing that we should be moving towards closing, and there's still a number of questions that participants are posting in the chat. We can probably use a minute to answer one or two questions, and then we'll invite the closing remarks. So I'm going to read one. Okay. And maybe Dr. Mari, I don't know whether you'll be able to take this. With the introduction of 2% withholding tax on agricultural produce for payments made to resident entities, does this approach not discourage local farmers, given that these taxes will always be transferred down to either the farmer or the final consumer? Or any member of the panel?
I think it's difficult to really assess what the impact will be now. One thing is to an attempt to expand the tax base, because there are a lot of farmers who generate income. There are farmers who sells hundreds and hundreds of tons of pineapple, for example, of a lot of other crops, rice, and they get sizable income. Of course, there are other smallholder farmers who don't have enough surplus to sell. But I think it's an attempt by the government to try to expand the tax base also at the production level. But I do believe that there will be more detailed explanation in the finance bill, how this withholding tax will be applied, what will be the criteria, and what conditions. And I think at that point we'll be able to assess more what the impact is likely to be, unless my colleagues that work on a daily basis on taxes, I think it might be in a better position to see that. But my take will be that for now.
Yeah, all right. Is there any other member that wants to top up to what Dr. Murray has explained?
Yeah, so let me add on that. So now the essence is the equity, as I said, because the minister was very clear saying the other sectors that are essentially like a parasite. They rely heavily on the other sectors, but then they are not paying. And they even went ahead and did an example saying a person, for example, with 9,000 cattle not paying taxes, but then demanding the government to use taxes from other taxpayers to build the dams and deep for them. He also used another example of saying a person who is earning 300 shillings per month as salary is paying taxes, but a person who has 200 million shillings from selling their produce, not paying taxes, but then receiving subsidies in form of fertilizers and seeds. So that's why this then came in to equalize the tax situation, to ensure everyone is paying tax. So the principle here is the equity. If I'm earning salary and paying taxes, why is boda that is earning something similar to me not paying taxes? So that is where this is coming from. Now, but the question is very, very key because why, as I kept it, I said this is being reinstated. Why was it introduced, then he abolished, then he reintroduced, then he repealed, and then now again? I'm sure there is a reason behind that because it could be because the farmers are affected because these industries are affected differently, but they respond differently to these changes. The way a mining sector will respond is different to the way the agricultural sector will respond. So I think there is a reason. Maybe that is an area that we really need to look into and take it offline. That would be my view.
Thank you, Sabato. And I really appreciate the participation from all the panel members. I think the conversations were engaging. I'm seeing people still trying to post their questions and comments in the chat. We acknowledge that we are seeing those, and some of them have been responded in the chat. So you can check whether your question has been responded. But I think we need to now move the meeting forward and close. So thank you for your very insightful discussions. Jared, God Victor, Peter, Doreen, and Dr. Murray. It was very insightful. And I believe that the audience has learned a lot. Yes.
Thank you, Jennifer.
Thank you.
Thank you, Jennifer.
Yeah.
Thank you.
All right.
Thank
So
you.
at this
Thank you, Jennifer.
point,
Thank you.